what we're going to be doing is we already did a call and everything. So our portfolio is pretty stacked with cash at the moment. Sorry for that. But we owe a ton towards that option, which kind of sucks. So I'm hoping that I'm just going to check when it expires. Expires in the 2029. So I'm hoping they go bankrupt by 2029, or at least to go away below $14 a share. We could get burned, but the long-term prospects is a lot lower than it is, so I feel like they're going to get really hurt when it comes to their profitability. Unless they start throwing cash towards stuff. Our net worth has taken a giant hit. My assumption is because of that call we sold. But yeah, we're going to look for some high growth stocks because it doesn't expire until 2 years from now. So the interest rates have went back up, so we kind of lost our gain on our bond. But yeah, we're going to look for another industry to enter into and high risk agreement. And we're going to risk it. Basically risk it for the biscuit. Internet doesn't look too bad. Network and telecoms look really good right now. Precious metals and mining, they're deteriorating. That's good news. It's declining, as you can see. But yeah. 14 to 18, this looks good. But the problem, return on protected assets is 2.6%. So maybe we'll have to find something that has a good amount of, like, the assets. Return on assets is pretty bad. Like, some of them are actually negatives. But you're looking for something like this. That's got a good return. But the problem is they're all overvalued. Except for really this one. But that's still not really much of a good return. Even though the industry is supposed to get better. So I really don't see much of a great opportunity with any stocks at the moment. BioTech is improving a little bit. Not bad. Oh, this one would probably be a good one. They're almost at book. A grade. Yeah, I'm going to buy a little bit of this one. 42% growth, 3% market share, 0% dividend, sadly. But they probably have great growth prospects. They've actually lost money this quarter. But they're expected to make 29 cents, so they're probably going to beat the estimate. Credit info, they're currently paying 8.5% interest. Wait, are they C grade? That would be a big turnoff. No, it's A grade. So I'm honestly going to eat up. We have 2 years in order to double our money. I think the company is a good deal. Yeah, I'm going to eat up as much as I can. So I'm going to put 15 million minus the 6 million that we did for our option. I'm going to put about $9 million in this company and see if it does well. $23.80. I'm semi-confident in this company. So I'm going to put a bit of money into it. I'm not going to put margin in because it's a bit of a mess. So now we still have like $6 million in cash and we have quite a bit in stocks. So we have quite a bit to cover that, but we're also in a bit of a red. So this big investment we just made has to kind of work out. So I'm hoping that works out. They're A grade, so highly unlikely that they're going to become triple B or below. So they don't have much credit risk. So I love that. And we still have some stocks that we own. Like we still have my stock portfolio. Made quite a bit of money off Florida. This one's not doing super well. Auto equity. I'm surprised that was called an equity, but yeah, we lost a lot of money on Genesis so far, but I feel like they might still do well. They don't have much of an earnings history. I feel like that's one of the biggest reasons why it's such a high risk investment, but analysts are expecting that it's going to earn money, so it might be a good buy for us. And I forgot to set a timer for this episode, my mistake. And there we go, 8 minutes. So we're just going to hope that Genesis works out really well and we can make some decent coin off of it while we're tied up in options right now. It expires in 2029, so we got quite a bit of time, and they're below the strike price right now at the moment. So I'm hoping they stay below 14. And we're just going to be betting on the industry going down. It's currently at 51 out of 2, so that should be a good time to buy into the industry right now. The industry has been all over the place, but the long term is supposed to be pretty bad, and they're about I sold a call when it was quite expensive. And the industry is a bit expensive too. I feel like it will be a good short for us. Who knows? I could be wrong. And if I'm wrong, I have some money set aside for that. But yeah, I feel like when it hits above this strike, we actually get hurt really, really badly. Yeah, it's like 8 million. Yeah, this could be the worst call we have ever done or the best call we have ever done. We received a ton of premium. So if it does go below the $14, we are basically set. I actually don't really care too much about these at the moment because we have so many stocks. I just gotta keep focused on what we're doing. So yeah, we made quite a bit of money off this one. I'm gonna do a bit of an analysis and see whether or not it's worth keeping or not. 71 cents a share. It seems like they're growing a lot. Yeah, so it's at 29 cents a share. It is a little bit expensive, I would say. It's becoming not an investment grade as much anymore. But they're growing their revenue by a ton. So I say, see their competence, very capable. That's somewhat okay. So I'm gonna hold on to it and I'm gonna watch it pretty well because it's at 349 PE. But I feel like it's worth the PE because to a certain extent, a high PE isn't bad because what it does is it basically means that like if it's a high PE, that means that a lot of investors are hyping it up to be a great earning potential in the future. But the problem is it's all in the future, so it took me 300 years in order to break even on that investment based on EPS. So I feel like it is worth their revenue growth. Their revenue growth is spectacular. But if they don't do whatever is expected of them, they could potentially get burned. Like they have a lot of growth. Like that's what I love about them. And the industry is supposed to be doing better over the long term. Sunshine's hurting us a bit. Hopefully it gets worse by 2029. I hope. We made so far $7 million profit off of this one. So that's not bad. Let's do a bit of analysis on it. 43 times. That's getting a little bit better than 300. So this company is growing a ton. But they're also taking on a ton of debt to grow. So that's the problem with what they're doing right now. But they're making $1.18 a share this quarter, approximately. So they're going to beat last year's loss. And the other 2 years of no gains. Oh, God. Forced. I don't know how you can check the news. I think I'm going to get in a bit of trouble. Yeah. My option? I'm in the negative right now, but I feel like it's going to go down. Unless I'm wrong. In which these margin call might actually save my butt. Because it could go up a ton in price. Or it could go down in price. So I'm hoping that I do really, really well when it comes to things. Yeah, so we're just going to check out GNS. Where this GNS could actually save us from this whole me selling a call on a bad industry. Because, yeah, it's double the book. Which ain't bad. Almost 50 times PE, which is a bit risky. But, like, yeah, they're expected to make $1.23 per share this quarter. And if you see their earnings report, so they're going to knock it out of the water. So I'm hoping that they report that. And basically we can almost make a ton of money off this stock. And we'll sell it and we'll get out of it because it will probably do well or it won't do well. $1.08, not bad. I will still take that. It's falling down a bit because they're giving it worse guidance, I believe. Beat the street's estimate. Okay, what's the next estimate? For $1.41. So double the book. Currently at 30 times earnings. I still think it's worth a hold right now. Who knows? I could be wrong. But the industry, no, I'm looking for BioTech. But so far, I feel like this investment we have made has really recouped a bit of the losses we made on that dumb call I decided to do, because I felt like the industry was going to do a bit crappy over the time period. So yeah, we're looking at the industry. So currently at 29. Long term. Oh wait, no. Why are we still looking at metals and mining? Genetics. I don't know why I keep coming out with that. Yeah, so it's in BioTech, I believe. I keep failing. Whatever, it doesn't really matter. I feel like the industry projections are going to be amazing. Projections. Currently at 13 out of 15. And what are we looking at? We're looking at Genesis. This company has 21 return on capital. It's a little bit expensive, but it's not even that bad. It's not 300 times. So I feel like it's still worth a hold. We're being a bit cocky with it, though, because I have to make up for the losses, basically, on that call we made, because that call's burned us. But then again, it's also fallen quite a bit. Hopefully, it goes down quite a bit. We have about one more year. And I'm just going to see it and see whether or not it will be worth it to cut my losses on that one. SSC, I believe that's what it is. Yeah, it's a mining company. They're rental liquidity. Like, they don't have much. $81 million. They're currently overvalued. They've made a bit of a comeback. They're a bit cheap. Research report, 71 cents. So I feel like they actually made a bit of a comeback. Raises their dividend. That's pretty good news. Yep. So we're just going to focus back on that BioTech company. So okay, so it's $1.51 a share. EPS for the quarter, which is still better than it ever was. So I don't know why they're giving it a sell. Like, unless they have a bit of a liquidity problem, but they're triple B, I feel like that's still somewhat safe. Interest rates are quite high, so that's a bit of a risk. Means that they're going to be dishing out a lot of money in interest. But I still feel like it'll be worth a hold, because, yeah. And so, we're going to see how well this works out for us. And I'll see whether or not it's worth trimming. Okay, I think it's about time we get out of GNS, even though I feel like it's kind of a dumb move right now. So now we have $21 million, and we have $8 million in that thing we owe. So yeah. I know it was a bit dumb to sell it whenever there was a bit of a, like a bit of people were exiting the stock, but it might still be a good buy. Anyways, I hope everyone has a good time, have a good one, and I'll talk to you guys later, and have a good one. Bye-bye.